Hey everyone, welcome back to Corporate Decoder. Today we're diving into a 10Q filing, and trust me, it's not as dry as your grandma's toast, unless your grandma's toast involves a company betting its future on a single drug. This filing is all about KalVista Pharmaceuticals, and the clock is ticking faster than a cartoon character running from danger. They're pinning their hopes on sebetralstat, a potential game changer for hereditary angioedema. Will it be a blockbuster or a bust? Let's decode. First off, this is a 10Q, which means it's a quarterly checkup on KalVista. This report covers the period ending January 31st, 2025, giving us a peek under the hood of their operations and financials for the last 3 months. They're listed on the Nasdaq under the ticker KalV. So if you're feeling lucky, that's where you can find their stock. As of March 7th, 2025, they had nearly 50 million shares outstanding. That's a lot of slices if you were to, say, make a pizza. Let's dive into the numbers, skipping the usual accounting jargon. KalVista's cash position skyrocketed. They went from about $32 million in April 2024 to over $167 million by the end of January 2025. That's a huge jump, but hold on, it came at a cost as their marketable securities have been halved, likely indicating that some of that nice cash injection came from selling off investments. Basically, they traded investments to keep the lights on. The overall current assets, though, still increased. They went from roughly $226 million, so there is a cash boost all in all. Looking at the liabilities, accounts payable decreased, going from about $9 million down to $6 million. Accrued expenses also increased slightly from $12 million to over $18 million. This probably means they are delaying or extending payment terms. Here's where things get interesting. They've taken on a massive deferred royalty obligation of over $100 million, where they had zero before. We'll get to what that means in plain English later. Their total liabilities went from a mere $23 million to more than $105 million. That is a lot of debt for a company with zero sales. Let's talk about the profit and loss statement. This will give us a bird's eye view about the company's expenditure. For the 9 months ended January, research and development expenses went down about $5 million to roughly $56 million. But general and administrative expenses exploded to more than $77 million from around $31 million the previous year. This massive increase in cost of administration and lower income due to the debt resulted in net loss that ballooned to over $131 million. This means they're burning cash and fast. They have 48 million shares outstanding for the last 9 months versus just 34 million shares the previous year. This resulted in net loss per share to common stockholders, basic and diluted, tripling to $27, which will wipe away shareholder equity. This is not looking great. Looking at the consolidated statement of changes in order to compensate for the increase in net losses, stock-based compensation also increased to $3 million in January 2025 and $3 million July 2024. This increase is also reflected overall from April. This all seems to come at the expense of shareholders, very Warren Buffett style. Finally, the statement of cash flows, which tells us about cash movements independent of accounting magic. Looking at the 9 months, this company used around $112 million versus $74 million the previous year. This is mostly because of that massive net loss we saw earlier. This was balanced in exchange with proceeds coming from royalty agreement of $97. This helps offset some cash requirements. This is not sustainable in the long run. The company has a lot of commitments, including clinical studies. They estimate about $22 million is still required for ongoing work. But the good thing is they have cancellation clauses. Let's talk about potential legal or strategic risks, because those can always make or break a company. There are a lot of regulatory wins with the FDA, EMA, MHRA, Swissmedic, the Therapeutic Goods Administration and Health Sciences Authority, Japan's Ministry of Health, Labour and Welfare. It all hinges on sebetralstat getting approved by regulators, and they're working on oral drug therapies that need FDA green lights. There is a risk with general indemnification because the company is currently not aware of any such legal proceedings or claims. And for some overall final keynotes, they received a $100 million upfront payment, which helped finance the business. Okay, stepping back from the report itself, what does all this mean? Rose at KalVista is clearly betting the farm on sebetralstat. a single product is risky because their income relies purely on the regulatory go-ahead. Second, while sebetralstat did receive an influx of cash, they need to convert that short-term boost into commercial success or it will all fall apart. This will be hard given competition from big firms and the KalVista did receive an influx of cash. They need to convert that short-term boost into commercial success or it will all fall apart. This will be hard given competition from big firms. A third, administration and promotional expansion suggests that KalVista is going full speed ahead in launching, despite regulatory issues that could halt this project. I would recommend playing it more conservatively. Fourth, the debt situation worries me. Those are concerning figures and need to convert to profits to keep the business going. Fifth, stock-based compensation should probably be looked into. With the sheer number of existing liabilities, they are doing a quick buck now, but in the long run will destroy value for its shareholders. All in all, this looks like a good business from outside the financials, but inside it's not the best, to be completely honest. As for the company itself, the company should have a lot more going for it if those issues are resolved. So there you have it. KalVista, good business, but questionable financials and shareholder compensation. If you found this breakdown useful, leave a like, drop a comment and subscribe for more corporate decoder content where we try to decode the world's confusing financial reports for you.